The smallest of gains here. Heading into the last few moments, Joe Mazzola joins us for a chat. He's head trading derivative strategist at Charles Schwab. Joe, great to see you this afternoon. We got VIX right now, 17.6. It tried to move higher this morning, came back down. So maybe a little fear from yesterday dissipated?
Yeah, it's traded on both sides and unchanged today, Oliver. So I don't know. I think the markets are kind of positioning themselves. Tomorrow markets are closed in observance of the passing of Jimmy Carter, former President Jimmy Carter. So if you can't trade on a day, right, there's no use paying that time decay. So I think that's part of some of it coming out. Plus, I think as Nvidia kind of turned around midday, that gave a little bit of a bounce to the market. But I think you have to look at this market throughout the multiple sectors today, because if you're starting to see some of those high beta names get absolutely clobbered. Today was quantum. We saw a little bit of that in some of the subnuclear space as well too. Anything that is kind of driving that need for additional energy, really took a shot from Jensen Huang's comments.
The potential for data on Friday to rile us back up again. How high is that in your mind?
The jobs data, the last couple figures that have come out, whether it's claims, ADP, or even job openings, are pointing to a market that's still fairly strong in terms of jobs. So, when we got those data points, and I'll even add the ISM data from yesterday as well too. A lot of those points really kind of took the wind out of the sails of the multiple Fed cuts this year. Basically pricing down to one, without any cuts really coming until June or July, or at least that's what the odds are showing right now. So I think the market is going to have to kind of recalibrate and figure out, okay, what will it take to kind of push to new highs if that Fed put isn't there? And what's that going to be, Oliver? It's going to be earnings. And so next week we'll get our first look at the financials. I would assume that those would be pretty good, kind of given the backdrop that they have. Steeper yield curve, a lot of optimism around changes in terms of regulations, and then changes in how that might affect M&A activity. So there's going to be optimism there. I think where the rubber meets the road is going to be once we start hitting the tech earnings. I think that's where the market's going to either reprice or continue to move up.
Okay. That's where we bring in Michelle Gibley to give us some global perspective on what other bond markets are doing too. Michelle, I see headlines around what's happening in England. And, I thought we were in a very different position than them, but it seems like their yields are moving higher anyway. So what's the story kind of globally on interest rates in your mind right now?
Yeah, I would say that, we've got a lot of bond issuance globally, and buyers are really demanding more yield in order to buy that debt. The yield increase in the UK, 18 basis points in 2 days. It's really not clear why, but the economy there is slowing, and inflation is still a problem. They've got a new payroll tax coming into effect this month, and so it's unclear how much the Bank of England can really cut rates. I would say that in Europe, the ECB is likely to continue 25 basis points meeting, and inflation there increased recently as well, but that's as they expected due to some timing of wage negotiations, and it's likely to come back down to 2% in the summer.
The difference between us and them, I guess maybe I was oversimplifying for a while, because I didn't think that their economy sort of had the ability to generate higher interest rates, when it seemed like a lot of ours have been connected to better than expected economic data. Is there any positive way to spin what's happening across the pond? Because here there's a pretty easy way to spin a positive. We could say, hey, rates are going up, yields are going up again, but our economy is really strong. It doesn't quite sound like we can do that for the UK.
Yeah, I think it's a little bit of a concern in the UK. I would say in general for Europe, sentiment overall is pretty low. And in terms of stock investors, that might be a good thing. We're seeing the MSCI EFA index, overall developed international stocks, outperform since the Fed meeting in December. The dollar's up 2%. That's a headwind. And yet, even despite that, international stocks are outperforming. And The MSCI EMU index, that's the Eurozone, trading at just 40% of the valuation of the S&P 500. So, what matters more than good or bad for stocks is better or worse. So if we can get some kind of improvement from the worst case right now, that could be good for stocks.
All right. Like that, giving us some awareness, some perspective. Thanks, guys. Michelle Gibley, Joe Mazzola. Good stuff there. Big picture discussion.